Hi there. I hope you're having a great start to 2011. In this video, I'll be talking about recent lending changes and how they will impact purchasing a property in Canada. Last month, Federal Finance Minister Jim Flaherty announced tighter mortgage rules in response to escalating household debt across Canada. Flaherty unveiled three main changes. The first two will take effect March 18th and the third on April 18th. Number one, the maximum amortization period for government-insured mortgages was lowered from 35 to 30 years. Number two, the amount of money Canadians can now borrow from their home equity has been lowered from 90 to 85%. And number three, the federal government no longer offers insurance on home equity lines of credit. So what does this mean to you? The first change, the amortization period for government-insured mortgages being lowered from 35 to 30 years, is likely to have the largest impact on buyers. Before these changes, buyers who purchased a home with a down payment that was less than 20% of the value of their home were required to purchase government-backed mortgage insurance. This type of insurance was purchased through Canada Mortgage and Housing Corporation. Under the new amortization rule, mortgages amortized longer than 30 years will no longer qualify for government-backed insurance, forcing buyers to pay off their mortgage within 30 years or less. So, for example, before this amortization rule, a $300,000 mortgage at 5% interest rate with a 35-year amortization would have a monthly mortgage payment of $1,514. But as of March 18th, a similar mortgage at 5% interest rate amortized over 30 years, not 35, will calculate to a monthly mortgage payment of $1,610, which means a $96 monthly increase. This adds up to a saving of $56,139 over the course of a mortgage amortized over 30 years, which is substantial. Which brings us to the second change. The amount of money Canadians can borrow from their home equity has now been lowered from 90 to 85%. This is a government attempt to ensure buyers have equity in their homes. Ottawa is concerned by a growing trend among Canadians to use their equity in their homes to purchase consumer items. And finally, the third change. The federal government no longer is offering insurance on home equity lines of credits, which will affect millions of Canadians since the ability to borrow money against their property equity will be much more difficult now. So there you have it, three changes that will affect buyers and sellers across Toronto and Canada. But these government changes are ultimately good news for buyers and sellers looking to make wise decisions for their investments. All of us are now obligated to pay off our mortgages sooner, keep more equity in our homes, and avoid high-risk lines of credit. So for the past several years, we've been conducting free client workshops along with private consultations that take into account government changes as well as consumer and investment trends. One of our workshops is based on the concept of financial freedom, which goes through the methodology of creating and sustaining lifelong habits that nurture financial independence and ultimately financial freedom. Financial freedom is reaching the point where your passive income sources that provide a monthly unearned income pay for or surpass all of your living expenses. In other words, you have money coming in which pays for all of your expenses and you are not actively working for that money. The other workshop will focus on real estate investing, where our clients will learn how to protect their financial future by investing in real estate, creating instant cash flow and building long-term equity. When you invest in real estate the right way and at the right time, you have peace of mind about the present as well as the future. Retirement becomes something to actually look forward to. We educate our clients to invest wisely for the long term, get paid more, and work a lot less. To learn more about our workshops or if you have questions, please contact me, Michelle Reed, at 416-879-7323. As a final note, you'll be hearing more from me in the near future when we launch our weekly blog. We'll be giving views on the best value for actively listed and recently sold real estate listings, as well as insights into market trends and updating you on the new changes affecting you in the industry. Thanks for listening. We hope to see you soon. Have a great day.